So everyone asks, like, what every calendar year, what's the forecast for returns in, say, 2022, for example? And we're always reticent to say 1 year forecast for one reason: markets are very volatile and things change very quickly. For example, in 2020, everyone said, the economy was going to roar ahead, things are looking good. And by February, March, everything had unraveled because of COVID. And so to sit here in 2022 and say, what do the markets look like? I think the one thing we can say is that we are emerging hopefully out of COVID in 2022. We are probably entering into a period of higher interest rates, and all other things being equal, we're going to see more volatile markets. And perhaps given the last 5-10 years of really good returns across the various asset classes, we'll see lower returns and more volatile returns in the next period as the economy recovers and also interest rates start to go up. Question is, how's Omicron affecting super funds? And what we're seeing is, well, first of all, from a work perspective, many of us are working from home. In fact, this video as we speak is being shot via home. We're doing this with most of our staff working from home, coming in on a sort of tapering basis. We hope as the month progresses in February and March, we all get back to some sort of normal environment. What does that mean for the running? Well, the fund's running as it is, but in terms of what's happening in markets, the markets are looking beyond COVID and once again are pricing in the opening up of the Australian and global economy towards Q2, Q3, Q4 this year. This is the third time we're trying to escape the Omicron, but that's the way the markets are behaving. And therefore, all other things being equal, some sort of normalization, interest rates start to go up, and markets will start to reflect that, we're starting to see a more normal environment going forward. So we hope to be closing a merger at the end of April, and we'll have more to say in the next quarterly about what's going on, and there'll be some corporate announcements. But effectively, from an investment perspective, what it means for our members is that when the two funds combine, there are a lot of synergies. We have a lot of commonalities in terms of the underlying investments that we own and the asset managers. We share the same asset consultant. We have a very similar investment philosophy across both funds, and already the teams are working together looking at how the funds will combine. We hope as we merge this fund, our members will get access to economies of scale, different types of investments, because the bigger fund will have stronger cash flows, and it will a broader range of products, whether it's directed investments, whether it's post-retirement investments and index investments. So there's just a broader choice for our clients and greater economies of scale so they can access interesting areas. A key part of this merger was for the statewide office both in Adelaide and Darwin to remain, and staff have all been offered interesting positions and will be remaining in Adelaide and servicing local clients, and in the Northern Territory servicing local clients. This was a key part of negotiated in the merger. We don't see any changes going forward for that. So our clients will continue to have their local contacts. The investment options in the past that have given the best returns, particularly in the last 5, 6, 7 years, have been the higher growth options. In other words, if you invested in shares, MySuper, high growth, particularly as the markets have done very well as economies have grown and interest rates have fallen. Interestingly, that has reversed, and it's only in January, and here we are in early Feb, but that's reversed. And in the short term, obviously it's noisy, but as you would expect, if you have a very long-term mindset, 10 plus years, you expect your higher risk options to return better over your lower risk options. And that's certainly been what's happened over the last year and 5 to 7 years. Yes, a very interesting time. So there will be a state election in South Australia in March, and there's obviously a federal election sometime between let's call it April and June this year. State elections have less effect in terms of the economy because, the economy is national and global. In terms of the federal election, obviously there's noise coming up to the election, what it means, but again, it's about the global economy and policy settings. So markets will discount a lot of that and just think about really what's happening post-COVID, budgetary settings set that they can enable the economy to grow sustainably over the long term, and where is monetary policy in terms of interest rates that will support the economy. And if anything, we'll probably see tighter monetary policy because we've had these record low rates. So I actually think both the state and federal election will be hyped up, but particularly over the medium term, have a less effect on markets and returns than people think. That doesn't mean in terms of regulation is a different part of the area, and we really do not know what type of regulatory reforms governments are planning, whether it's in super or in finance or other parts of the economy as yet. We passionately talk about this. So when we think about our members and what they should be thinking about 2022, it's always that to talk to us. If there are any issues regarding, are you in the right option? Where are you in your career path? What type of insurance coverage do you have? What type of investment profile are you seeking? Are you close to retirement? Are you in post-retirement? The best bet is to call us and to come and seek advice. Because I think every member is different, and really what's a key part of Statewide is that we have access where you can call us and our people will talk to you about helping you make some choices and decisions. Performance for our various options over time continues to do well. Again, in the investment quarterly, we show the performance for the default MySuper since inception, and that still remains amongst the one of the top performing funds relative to our peers. In the short term, of course, we always say that the returns are noisy, and we do manage for the longer term. And if you look across the various options, they have tended to perform well over the longer term, given the strategies that we've deployed.